based, Dr. Eric Tait, who received his, let me see if I got this right, received an MD in internal medicine from Baylor and is a healthcare management and entrepreneurship expert, and currently the president of, I'm probably going to say this incorrectly, Vernonville Asset Management.
Vernonville. Yeah, Vernonville.
So sorry. Yes, great. Dr. Tait, thank you so much for joining us, and please give us a little bit about yourself.
Absolutely. And I assume we're going to have the presentation portion after we do this, correct?
Yeah, we decided to switch it around last minute. So
yeah, not a problem. And so I'll walk people through our portfolio, and I can talk about each type of asset class and why we did it, and some things around COVID and Amazon and things of that nature at that point in time. But just background for me, in Houston, originally from Mount Vernon, New York, hence the Vernonville Asset Management College in Atlanta, came to Houston to go to Baylor College of Medicine for my MD, and I did a dual degree MD MBA at Rice University. I'm an internist. I still have a very small practice just because I like to still practice. But I spend most of my time on the entrepreneurship and investment world. This time, I would say we own probably everything but office and probably mobile home parks. We've owned kind of most of the things in the gamut from that standpoint. And so our big thing is to be kind of the alternative asset investment platform of choice for busy professionals. So we focus on real estate, whether that is ground up development and or buying and holding for cash flow, private debt. So we create private notes that, whether it's in an operating business or we're looking at doing it on the real estate side, and then some angel investing in this particular in this particular side. And then I founded a venture firm with 3 other partners 2 years ago, so that our investors get exposure on the post kind of Series A funding round of venture. We do a lot of SaaS technology platforms, and I actually was up at South by Southwest this past weekend because about 5 of our portfolio companies were up there either talking or presenting or being on panels or things of that nature. So anything that doesn't trade on public markets, we will look at from that standpoint. So that's a little bit of kind of overview of our companies, and then I'll do a deeper dive during the presentation portion. So my journey is probably easier to show and give some context around from that standpoint. And so for me, I'm president of Vernonville Asset Management. I created that actually just as our own kind of way to invest personally. And then as the journey unfolded, you can see that we were lucky to set up our asset protection structures early. So we had LLCs and things of that nature set up as we moved forward. And so, again, from my background, I was a biology major in college. And so when I went to business school after the first 2 years of medical school, I did my first kind of financial accounting course ever. And at that point, there was a high flying kind of energy company here in Houston. This was around 2000. And the interesting thing was the company stock price was continuing to go up in the summer of 2000. I went into business school. We did this company's books for 97, 98, 99, and found that they hadn't made any money from core operations over those 3 years. I'll never forget the professor over at Rice circled the 3 negative numbers and said the IRS could consider this company a hobby. Just so happens that company ended up being Enron. And we kind of know what happened from a historical standpoint. But it was at that point in that summer that I then sold all my stocks, bonds, mutual funds, because to me, it was one of 2 things. There should have been no reason why a second-year medical student, first-year MBA could figure out that this company wasn't really doing anything worthwhile when people on Wall Street were getting paid millions of dollars to know this. And so it meant one of 2 things. Either they didn't know or they didn't care. Either way, I couldn't have my money there. And so that set me on my journey to figure out how to invest my own money, but to invest it in such a way that I could have what I like to call time freedom. Right. So for me, it was never about making a ton of money. For me, it was about always controlling my time and being able to control my time and do what I want to do with who I want to do it with whenever I wanted to do that. And so that really set me off on a specific path where I was able to go to business school with the mindset of not trying to find a job, but really trying to understand how and where wealth moved. And so in my mind, I'm not smart enough to necessarily invent things, but I am smart enough to follow what the wealthy do. And this is a group called Tiger 21. They're a private wealth investment club and kind of network club that a couple of my partners are members of. And essentially, you have to have $10 million of net investable wealth to be a part of it. And so you can see here what their asset allocation is, right? They don't invest the way that we were taught as maybe middle class and upper middle class people growing up. They don't really use 401ks and IRAs or those kinds of things. If you can see here, and this is an older allocation, it's gone down in the public equity sector to about 22%, but well over 50% of their investments are in real estate and private equity. And that private equity is venture, it is true private equity, or it is a company that they started for themselves. If you look there, hedge funds, and I count that as public equities because it's just long short, and then fixed income, and that's public fixed income. That's really not private fixed income as well. And then you look at cash and cash equivalents. So I set out to try to figure out how I can make my portfolio look like the wealthiest, because I try to set myself up in the ways of people that I'm trying to emulate and go forward with. And so, I was asked that question when I'm talking to investors, is how closely does your portfolio approximate that? And so, as I talked about earlier, our big focus is on real estate, private debt notes, and then angel/venture investing. And so from a current cash flow standpoint, I started like many of you all, single family homes. I still own dozens of single family homes in and around the Houston area. Transitioned to small apartments. And again, this was not with other investors. This was just my wife and I and our family wealth doing this. But once we started having some success, I had other physician investors come to us and say, hey, you're doing some interesting things. Can we join you? So went to a securities attorney. They said, hey, no problem. Give them all this paperwork, 100 pages plus. Tell them you're going to lose all their money. If they still want to invest with you, go forth and prosper. Luckily, we've not lost any investors' money, but that doesn't mean that every deal goes 100% well. But we have one or two deals that are kind of COVID hung up a little bit. But for the most part, we've had a pretty good track record from that standpoint. And because I don't invest in the stock market, my personal money is in all of these deals that we're ultimately doing. And so right now we don't have any multifamily just because the cap rates are so low. But we were in multifamily. And then when we started bringing investors in, we actually went offshore. We actually helped to build the Hilton in Belize. And so that's actually one of the deals that's actually it's built. It's a 4.5-star hotel. It's a great property. But I can give you stories upon stories about building in a third world country from the ground up. And so this deal, while it's a great deal and we have some equity, the cash flow isn't coming out the way we want it to yet. So this would be one of the deals I would say is not where it needs to be, but it was one of the early deals that we did. And we just built from there. We stayed with the offshore theme and bought some coffee plantations in Panama. And those have done well as the price of coffee has started to go up. We've had some logistical issues around COVID with the crates moving from there. But from that standpoint, it's been a great investment, and it's a long-term investment. This is a 10, 15, 20-year plus type of investment. At that point, we're like, okay, we've done a lot of exotic stuff, but let's bring it back more terrestrial and national at that point. And so then we started moving into B-class, triple net, large commercial properties in and around the Houston area, in the College Station area. We like the Texas market because it's a growing market. I could never put another dime outside of Texas and have a very fruitful career, just with the population and demographic changes around that. And so then we just started buying a bunch of these, specifically around Amazon resistance. But we ended up seeing was these properties performed actually pretty well during COVID as well. And so what we found is that those things that tend to be Amazon resistant are also kind of pandemic resistant, because they tend to be in and around services businesses and things that are essential businesses from that standpoint. And so this is just more of the shopping centers that we purchased. And this is all from essentially 2018 to now. And then we pivoted and started buying light industrial as well. And so before industrial became all the rage, we started buying some roll-up light industrial B-class infill in the Houston market. So we have probably about 1 million square feet of that now as well. And so we're just putting together groups of people to buy these types of assets. And so interestingly enough, the one you see here on the right, Point West, we sold that after a year to roll the money to another property because we could get higher upside, but we had about a 15% return in 1 year. This property is actually currently under contract. It should have actually closed today or yesterday. I have to check with my partners on that to see. We held this for 3 years, hit our pro forma number, and are willing to move out of that. And the one I showed you earlier, we rolled the money into this particular portfolio project literally this time last year, and we're under contract to sell 2 of these 3 properties. We've gotten them leased up and have hit our 3-year pro forma already. And so things are moving very fast in the flex industrial space. things are not moving quite as fast in the triple net retail space. So I can talk about that during the roundtable if you like. This is just another triple net project. This is an interesting project because one of the tenants here is Texas's largest and oldest hemp manufacturer, and they're being set up right now to go after a medical marijuana license. And so they've charged my company to do one of their seed rounds. So we're raising about $1 million to go in with some preferred shares on a 7% note. So this is just a way to stack on top of kind of angel investing on top of your real estate investing if you kind of know what to look at. And these two properties I'm going to show you now, we just closed in January, a couple of months ago. And again, the theme around the light industrial centers is a big deal right now. And then also we've gotten to the self-storage space as well. And again, I have different operating partners that I work with. So each of these different asset classes have different teams that we work with. I bring money to the table. I become part of the general partnership. Our investors become LPs, and we pass through all of the tax benefits as well. And then this is a build to rent project. And we're going to be doing a fund around this build to rent infill in the Houston market. And so this is in an area called Third Ward, which is rapidly gentrifying, very close to universities. And so this actually was going to end up being student housing because we built these to be suites rented by the room. But we're going to be doing some regular duplexes upstairs, downstairs that will command $2,200 rent in what we call kind of diversified adjacent neighborhoods. And then in terms of private debt notes, many of you are familiar with Dr. Doc lending. They finance physician and dentists for private notes, loan refinance, equipment financing. We put some private notes together with them from an arbitrage standpoint recently. And on the angel side, we like SaaS. So Data Gumbo is a large SaaS platform with blockchain technology in the oil and gas space. Myoderm is a nationally known CBD cream company. So we've been in that space a lot. And then we did a $1 million equity seed round for Dr. Doc on the equity side. So we put investors together to create almost a real estate deal where they're getting cash flow from the debt side and equity in the company itself. And so that's kind of how you can do some creative financing around companies that you're working with. And then lastly, we talked about me starting a venture company, and we did that in 2000. And kind of these have been our returns so far, and we've got our sixth fund open now. And that's 10 minutes. And so I'm out and happy to answer any questions around any of the things that we just talked about.
Well, thank you so much, Dr. Tait.